Welcome to the Political Risk Podcast, where risk, insurance and geopolitics meet. I'm your host, David Benyon, and my guests today are Kayley Stewart, Head of Crisis Management at SCOR Business Solutions, and Babak Tavassolie, Head Analyst of Political and Credit Risk at SCOR Business Solutions. Our topic for this episode is macro risks and buying trends across credit and political risk and political violence. Kayley Stewart has 20 years of underwriting experience and is responsible for the terrorism and political violence underwriting book at SCOR Business Solutions, which is the specialty insurance arm of SCOR, one of the world's largest reinsurers. Kayley began her London market insurance career as a broker of international casualty business at Aon. That was before taking on underwriter and senior underwriter roles, first at Lancashire, later at Liberty Specialty Markets. Next, she joined Fidelis MGU as Head of Specialty in 2020, promoting to Head of Crisis Management and then combining this with a Deputy Chief Underwriter role. She joined SCOR Business Solutions as a Senior Underwriter in 2023 and has taken on the role of Head of Crisis Management as of June this year. Babak Tavassolie is a credit and political risk manager with more than 15 years of experience. He spent 3 years studying Mandarin Chinese at Royal University in Bochum, before an MA in International Studies and Diplomacy at SOAS in London. He studied and worked in China, including some time working for the Beijing desk of German newspaper Die Zeit. Babak was an investment banking graduate in the International Operations Department of Standard Bank, before becoming country risk and credit risk analyst at Ace Group. He went on to more senior credit risk analyst roles at Credit Suisse and Sompo International, and then country and credit risk manager at Chubb, until joining SCOR Business Solutions in 2022. This is a wide-ranging conversation in terms of the macro risks we talk about, including high-level credit and political risk at investment level, as well as the political violence, physical damage concerns of companies operating around the globe. This breadth in the conversation means that it's one of those conversations that combines the two core specialty lines of insurance business for this podcast, namely political risk and political violence. Well, I hope you enjoy the chat. Thanks both of you for joining me. It's fun to have you both on the pod.
Thank you.
Thanks for having us.
Kayley, let's begin with your role at SCOR Business Solutions. So can you just tell us to start with about how the PV book has evolved, what direction the team's taking in terms of appetite and maybe geographic spread as well?
So we've had a few iterations of the PV book at SCOR, and it's taken some different forms. Previously to me, it was quite Middle East focused, and we now have a well-spread portfolio of business around the globe, and we concentrate on the products and regions that we know well. What I think differentiates us is that we have a fantastic management support, so namely Marie Bigas, who's our CUO, and her background is also terrorism, political violence, and also Henry Mume-Young, who's our active underwriter. He's been running the political risk team at SCOR, which has been really helpful to have that senior leadership team around us that completely understand what we do, and they've given us the tools to be able to do it. And also sort of internally, the support in the background that we have. So we've got dedicated exposure management resource, actuaries and claims. We're a high policy count line of business in a very competitive market, and it's about having the right people doing those roles well with good relationships with our brokers and clients. And the core part of our portfolio is terrorism, sabotage, SRCC and PV perils, but we also have appetite for cyber, where there's a physical damage trigger, PV event cancellation and terrorism liability.
Well, Babak, let's turn to you now. So you joined SCOR Business Solutions credit and political risk team in 2022, and that then merged with the PV team about a year ago. So how does your political and credit risk analysis function support underwriting decisions? Yeah, just explain how that works and how you balance your internal advisory role without being a formal gatekeeper.
Thanks, David. Thanks for having me on the pod. Yes, that's right. So the political and credit risk team, we are mainly a credit book. So I think we have about 90% of credit exposure and about 10% of pure political risk exposure. But because the product we sell is a comprehensive non-payment insurance product, we cover payment defaults from obligors for many reasons, including political risk ones. So when I look at a credit, I don't just look at a pure financial balance sheet and sort of, P&L and everything. I also try to understand which political events could make this company default or force the client to claim on the policy. So when I look at a normal standard company, I have to keep in mind political risk. It works quite well working with Kayley's team because, as you said, Henry used to be my boss before he moved up. but he knows the product really well. So it makes sense that we belong to we've been merged together. So I think you hit the nail on the head. I'm an advisor. I'm not a gatekeeper. It's very clear that insurance companies, risk teams don't work like banks, for better or worse. We help underwriters like Kayley to understand the risk rather than say yes or no. Because sometimes, for example, you look at a company, it's got a frightful balance sheet. You dig a bit deeper, you think actually the credit makes sense. It does make sense. So we can actually look at this a bit deeper. Same for political risk. There are some regions, Middle East being one of them, with my Iranian background, I know the region a little bit, and it's not a blanket, no, don't touch this, don't touch that, but often we help identify opportunities in a difficult region. I say, look, this is a difficult region, but perhaps that area is less exposed to particular political violence risk in other areas.
So you don't look at everything, though?
We look at every region, we do, but in a PVT risk, there's only, for now, the demand for exposure is concentrated in certain areas. And then I can help with giving the knowledge.
I thought it was interesting when you said, I think you said 10% of the book,
yes,
approximately, was political risk. But because it's really down to what's the motivation. I mean, I assume you are going to know what the motivation is, because maybe via the broker, but there is that client conversation there. So hopefully you would know what the motivation is for buying the cover in each policy's case. But potentially it's actually a lot bigger than that 10%, isn't it? Because who's buying that broader credit risk cover, if they were to rank their priorities of buying it, is political risk up there? And was it up there 5 years ago? It's seems to be that the answer is probably yes. The way the world is now anyway, it's changed a bit.
Yeah, I think I would absolutely agree with that. The prime motivation for our clients to buy insurance is still credit insurance, still is capital relief or risk management. This is still on top. But political concerns definitely going up. I mean, I think you can imagine political risks in the developed world going up, election of Trump being one of them, Russia's invasion of Ukraine the other. People, clients are getting a bit more concerned about political risks rather than credit risk, because we have had incidences over the last 5 years where there were large claims were made or filed for companies that had excellent credits, but they couldn't repay because of political action, sanctions being the most obvious one. I'm not aware of a claim yet, but I can imagine that when Trump withdrew government support for offshore wind projects, where he said, I'm not going to license any new projects.
Well, we'll get into a little bit more on the makeup of the market and how that's shifting a bit. Kayley, do you see a shift in the behaviour of buyers in your market, in the PV space? Obviously, we'll talk about standalone PV cover, risks like SRCC within that, strikes, right, civil commotion, obviously. Yeah, are clients more aware of these exposures today?
Obviously, we've seen a significant increase in SRCC and PV frequency and severity over the last decade. And we've also seen kind of major cities as those epicentres of the events. So things like George Floyd, the Yellow Vests, Hong Kong, South Africa, New Caledonia. And as you just said, geopolitical instability is a growing concern of CEOs and how it could potentially affect their operations. And I suppose what we've seen is multinational companies, businesses that have got that geographic spread in city centres, and then also firms with international supply chains that have come to our market that maybe wouldn't have done before. And our risk count as a market definitely shows that. And yeah, there's a huge influx of business which is pouring into our market, which is fantastic. And I also think that risk managers aren't always taking the sort of all risks, in inverted commas, sort of at face value anymore, and sort of asking questions about how the coverage actually works. And I think the PV market is maturing in response to that in this world that's visibly more politically volatile. The only thing I'd say on that is I do see a gap for SME businesses where there's less infiltration of the PV product, where those businesses have got heavy urban presence.
That's an interesting one. So I wonder how the market can get better at providing a fit-for-purpose product for those smaller clients then.
I think we've definitely seen it in some parts. So you obviously had Tom Clementi on before. That is why he's changed Paul Ree to the model that it is now to try to infiltrate the SME. But if you think about places like South Africa, you're probably not going to get the same spread of business.
So Babak, you already began to allude to political risk traditionally being viewed as an emerging markets concern, kind of stereotypical view of the world for, let's say, Western multinationals that, where do you operate? Is your office just in London and Paris? Traditionally, wouldn't be a buyer. Sub-Saharan Africa, yes. But yeah, it does feel like that's shifting now. You're seeing developed market clients seeking protection from disruption. So yeah, how do you see that shift, assuming there is a shift, and how political risk is embedded in what might otherwise be seen as like vanilla credit?
It's not so much that I can see a specific demand for political risk cover in Western markets yet. It's more that our clients are more worried about political events affecting their own clients' ability to repay a loan. For example, we definitely saw some increase in sort of questions around offshore wind in the US. Previously very vanilla field, project finance, you look at the financials, looks good, looks great. It's an excellent jurisdiction, fantastic. Then it's a negotiation about price cover.
10 years ago, why on earth would they need political risk cover?
Exactly. But for us, it's not political risk cover, it's credit cover.
Yeah.
But they're buying it. The concern is not because they're worried that the project finance can't repay because of financial issues. They're worried that the project can't repay because of political issues. We're providing comprehensive non-payment insurance. So when the project can't repay for any reasons, including political ones, that's the concern. So before, for example, it was cheap as chips, really cheap, because there's no political risk. It's pure credit risk. It's a great product. Next. But now we're thinking, okay, we actually can't just sign it off because the credit looks good, but let's not think about the political risks. Yeah. And I have earlier said I'm not a gatekeeper, but to that point, I said, let's not insure this because the credit is great. It's a good structure, but I'm really worried about the political risks here. And that's a concern I would never have raised 5 years ago even. I would have just purely looked at financials. And I think in the last 5-6 years, this is an issue. For example, in our market, project finance is a big new driver of business.
And is the way that those products are structured that you've already described within your book of business? You mentioned the 10% outright political risk stuff, and then the vast majority of the book is credit.
Yeah.
But the motivations for buying that may include some political underlying concerns.
That's exactly right.
So is that quite typical, as far as you know, on a kind of macro level across the market? Because if you're concerned about that in terms of deciding to write business or to not write business, then I'd be very surprised if you're the only person who that's weighed on them.
I mean, I can't speak for the entire market. I don't know. That's the answer. But I think you're right. I mean, I was speaking to other analysts offline, and that's the main concerns for all of us. We have seen a lot of claims for, again, very normal structured credits businesses in Germany, in Europe. And the claim was based because of political events, not because of the credit. And that is something I think is definitely drives risk management a lot more. And not just in insurance, but also in banks. So I can absolutely see why some banks are looking for, comprehensive non-payment on products, on projects they might not have even covered before, because, the credit is excellent, but we don't need insurance. But now, let's get it anyway. They're not worried about someone destroying. It's not the classic PVT product that Kayley's team provides. It's not that service. It's more that clients getting increasingly concerned that a political event will trigger a non-payment.
We've already talked about assumptions that all risks policies, that everything is covered, as the name might suggest. So Kayley, for SRCC risk, that's something that people have thought it's covered within all risk policies in developed markets. We all know some notable examples when it has been, and then the following year it's excluded because big events have taken place, and obviously that's part of the maturing journey of the PV market in places like Chile, for example. But do you think there's a risk of underinsurance, especially as civil risk becomes, more frequent or more severe?
Yeah, so I suppose from a client point of view, if the SRCC is excluded from the all risks, that's when the insured would look to our market, to the PV market, to buy something standalone. But I suppose what we have been seeing more recently is the SRCC within the all risks being sublimited. So the all risk market or the property market will limit their exposure, and then the PV market are then approached to top up policy and sit above the sublimit. What we've also seen is geographical exclusions from the property policies, and therefore sometimes the client will approach us for PV cover for a single territory rather than all of the territories. Right. So we do see some clients who will buy a first loss limit or just take up the sublimit that's being offered to them from the all risks policy, which could cause them to have a gap, obviously, if something sort of went through the top of that. As we've discussed, unrest has increased globally in the last decade, and that's where the TPV market stepped in to ensure our clients have that continuity of cover. But we've also expanded the offering to malicious acts as a named peril, and also clarified that looting is covered following an insured peril to give clients that certainty of cover. I suppose my fear is that only the largest and most lucrative companies are insuring themselves for adequate limit. And as we've seen from past events, even here in London, there are companies that have had damage from unrest, they're not able or simply don't know about the standalone PV product.
That's also a good example of your earlier question, how we work together, because around the time of the South African riots,
So what's that, 2019?
2020, late 2020, I was looking at a Ministry of Finance policy. Nothing unusual, standard MOF non-payment policy, CF risk in the market. And it was, as usual, 7 years, I think, maybe 8 or 9 years. But the main concern, again, was not necessarily the Ministry of Finance willingness to repay, but are there any structural issues in the country that might prevent this policy from paying out because the government suddenly, I know, it's been taken over by extremist elements, for example. And those riots actually, worried me a little bit because I saw, I think it was when former President Zuma was about to be imprisoned because of some corruption allegations or charges or something I think it was contempt of court charges. Yeah, and then his supporters came out in large numbers. And that was before the elections later. I thought, okay, he's got so much support. What happens if he somehow, which in the end happened, gets out of it and stands again and then gets elected? And then you have a corrupt president with a corrupt record back in charge. I don't want to make too many links here, but back in charge with a vengeance. What does that mean for the credit of South Africa? And I talked to David Guest, your predecessor, about that. And we talked about rising risk of unrest in South Africa and what this means for your line of business. That was quite interesting because of how our lines, me looking at something completely different, absolutely impacted my view of political risk. And so
I've kind of taken my eye off that one after the election that took place there, because obviously last year everyone's reports, and that was the big focus, people talking about the super cycle of elections. There were so many last year, but predictably whenever you emphasise something, it's quiet, and there wasn't a great deal of activity. So, which is predictable in some ways, because an election is in the diary months ahead, so you can plan around it and have security, and you could try and manage the situation. It doesn't catch people by surprise. But I think that was an interesting one, because obviously they are in unbroken ground, whatever the right phrase is, but kind of because it's a coalition government. So that's probably one to continue to watch, because you don't know how long the government as it is now will continue. In the West, certainly we've had a trend towards more elections, unplanned elections, haven't we, in the UK in recent years, France as well.
The interesting point on that one is, yes, you are right, we can't keep the eye off the ball, but amidst all this volatility and craziness happening, there are some fundamentals that are still true. Coalitions don't break apart just like that. They break apart over budget decisions. So all you have to do is look, when is the budget due? What are their positions? And then you start paying attention. There's no need to constantly, oh my God, they're disagreeing with this bill or that bill, or whether to raise a tax here or raise a tax there. But when the actual budget comes through, then this is exactly when every coalition falls apart, be it in Western Europe, be it in Africa, almost in the US at the moment. We see this is the thing. It's nothing else. So I think
the rubber hits the road of promises. That
follow the money. All I'm saying.
The priorities are different.
It is absolutely right.
Yeah.
Kenya could cause the riots there last time. Well, it was the bill, wasn't it? The tax bill. Yeah. So I think there are some constants you can use. I wouldn't ask anyone to constantly watch the news. You go mad. But there are some things put in your diary. But in South Africa, for example.
One thing that's another big theme, I think generally I keep seeing in the news, but certainly in this podcast, nearly every episode, so it'd be odd of me not to mention it, is sabotage, ideologically motivated, state-backed, politically motivated, whatever you want to call it, being a big trend and something that, I think there are events, but there's certainly fear of more events to come or bigger events to come. So Babak, but maybe also Kayley as well, because we're definitely into your territory. So how do you see these evolving, especially in terms of attacks on economic targets like infrastructure or corporate assets? Obviously, this being a business podcast, insurance podcast. Are we seeing convergence between traditional terrorism, sabotage and politically motivated protest?
I think yes and no. I think that sort of the motivations for certainly terrorism haven't changed. They've been the same for millennia. They'll be the same going forward. But sabotage, I think there is a confluence here. And I think something you may talk later about is some of the macro trends I worry about. And one of the macro trends I worry about is the increasing economic inequality in rich countries, which are frustrating. And if you have got a well-known business person who's well exposed, makes political comments, potentially enters the government, and has a very high value brand as a business, that business will get attacked almost certainly. I mean, Tesla is clearly the best example here.
Yeah.
So I think the sabotage there is absolutely motivated by economic events. The other sabotage, I would say, is the cables in the North Sea, the Nord Stream pipeline. Those were absolutely linked to the war in Ukraine. So they do confluence at some point, but I wouldn't generalize this. There's some sabotage is sabotage, sometimes for whatever reason.
Yeah.
But there is an increasing, I think, basically politics is influencing everything else ever more as we get more polarized.
I mean, I like talking about this issue because it's one that crosses lines of business. And clearly this is called the Political Risk Podcast, but it's as much political violence as anything else. It's, we're supposed to talk about geopolitical risks. But the insurance market, for understandable reasons, likes to organise things in neat silos. But the risks don't always play ball with that. And, the perpetrators, it's really their tactic of choice where they decide to launch a cyber attack or a conventional terrorism type attack. So, yeah, but sabotage is one of those ones that certainly crosses lines of business.
I do think that sabotage is becoming, it was always sort of terrorism and sabotage, and the sabotage was almost, it was always really the terrorism that we were sort of concerned about. And so I suppose that was, was how our market evolved from 9/11. But in recent years, and sort of really in very recent years, we've now been discussing it on panel meetings and how sabotage, what it looks like and what it means, because we've obviously got a definition of it. But what does it look like in 2025?
Let's look ahead to some macro trends, and we'll stay with you, Kayley. So from your crisis management standpoint, how do you view hybrid warfare as part of that PV landscape? Are clients engaging with coverage proactively? Is it a big concern for them?
In recent years, hybrid warfare has significantly shaped how we define political violence. What was once primarily associated with physical acts, so like terrorism, riots, coups, now includes broader, more complex set of initial tactics. So cyber attacks, we've got these disinformation campaigns, economic sabotage, infrastructure disruption. So I suppose it presents a few challenges. And firstly, as you mentioned earlier, the attribution is increasingly ambiguous. In many hybrid warfare scenarios, it's unclear who the attacker is and what their objectives are, or even what category it kind of falls into. So whether it's cybercrime, terrorism, geopolitical aggression, and sort of, as we mentioned, sabotage in the energy and communication infrastructure in the North Sea. There's always been the sort of suspicions of Russian involvement, although it hasn't been confirmed. But then there have also been more definitive cases. So we saw the NotPetya malware attack in 2017, which was launched by the Russian military, and then the Viasat satellite hack in 2022, which targeted the Ukraine military communications just before the invasion. And then we've seen Iran, who's linked to cyber operations targeting Israel's water systems. And then we'd also seen Russia and China have conducted disinformation campaigns, which was aimed at influencing Western elections and sowing social division. So I think what sort of changed, I suppose, in the market is what those primary targets are now. So we've kind of always seen, I suppose, from sort of SRCC world and kind of creeping into our market, the retailers, but now it really does seem to be logistics companies, food suppliers, utility companies that have traditionally operated, I suppose, mostly peacefully and now sort of increasingly vulnerable.
Yeah, and they're in the firing line from hybrid warfare.
It's whether those entities are adequately insured and structurally prepared to respond to those threats.
Babak, from your perspective, looking at macro trends, what are the trends that you see shaping the political risk and the PV environment? So both, I guess, in the years ahead. Maybe inflationary things or geopolitical fragmentation we're seeing in different ways, maybe climate-related threats. How are those shaping or reshaping your outlook?
I mean, how much time have you got? I mean, that's a lot.
Much as you like.
There's a lot out there. The immediate macro trend I'm worried about most is that sort of shrinking economies, fears of recession, inflation are turning societies to look inwards. And when they do look inwards, politics tends to shift right, which means sort of, our country first, make X, Y, Z great again, fill in the gaps. And when this happens in a context against rising costs as well, rising cost of living, inflation, politics gets really polarized because for some people, certain issues are really important. And when you see, for example, you saw it in France, for example, when the Yellow Vest movement you mentioned earlier, that triggered a month-long protest because the government had no choice. So we turned rightward, obviously, and right-wing politics often means you cut social services. It's often a go-to place to go to. And you see a lot more resistance, and the politics gets more and more polarized. So, if, again, as politics turns rightward, I'm a bit worried that sort of left elements might resort to more violence to resist against those policies. It's not just what I mentioned earlier, that Tesla has been attacked, but also none of these populist parties in Europe cares much about climate change. And I wonder if we were going to see some increasing activism from climate protection, environmental groups. I mean, I'm thinking of Greenpeace in the 90s, early 2000s. This is something more immediate I'm worried about, what this means. And because all the trends at the moment turn towards this being exaggerated. You saw again, as we speak today, the Trump's big and beautiful bill is being debated in the US Senate. It will probably be passed. I'm not sure, but it will probably pass with some adjustments made to stuff like Medicare, Medicaid. But this bill, if it does slow the economy while at the same time driving up inflation, driving up inequality and burdening sort of future generations' interest payments, this is not usually a recipe for social harmony necessarily. So it's these that I worry about because they have a real life effect. The Chile effect you mentioned is exactly that. I mean, Chile had a fantastic economic growth. If you just look at the numbers, a success story. Dig a little bit deeper. I think you mentioned, we talked about this before, David, that the median income of the average Chilean has actually not increased in 30 years, much anyway. And you raise the question, so if the country has grown so fast and median incomes haven't grown, where has all this economic success gone? It has clearly gone not to the masses. And then you have a metro fare increase of a couple of cents, 4 cents, I think, and the whole country goes up in flames. This is the stuff I worry about as a macro trends. And of those, stagflation is for me the most dangerous one. It's the combination of stagnating growth and rising prices. If inflation goes up, inflation can be not a bad thing. You can inflate your way out of debt if your mortgage is fixed, for example, and your salary goes up. It can help a little bit. But if growth doesn't go up, your salary doesn't go up. But inflation goes up. This is the worst of both worlds for everyone. And you might even lose a job because the company can't deal with stagflation, less demand while rising input prices. You lose your job. Still prices go up. I mean, you can just sort of continue this line of thought to see how unhappy people are who already feel squeezed. The reason why people turn to populism is because established political parties are perceived not to have helped the middle-class living standard of the last 20, 30 years. Hence, traditional middle-class areas vote increasingly for right-wing populist parties. In Germany, here in the US. And then the government, what does it do? The government can't do very much. In the UK, the fiscal means are very, very limited. What does Reeves do? Does she raise taxes? People go on the street. If she doesn't, what are the options? Are we going to pay more and more interest? And one more comment on interest. A government's interest payment is roughly a redistribution of wealth from everyone to the wealthier, because it's basically the holders of government debt are people with savings, pensions, people with assets. If you have got no savings, so if you have money in the bank will use that money to buy government bonds and pay you the interest. That's why your interest rate is usually in line with the Fed. So the Fed rate in the US or the Bank of England rate here. So if the government pays, it's in the US, I believe, $1 trillion are interest payments. It means it takes $1 trillion of the taxes it collects from everyone to redistribute this to those who have savings. At the same time, you cut Medicaid. At the same time, you cut social services. You cut investments. I mean, this is not a great recipe for social harmony, I think. And this is something it's really dangerous to address, because what does the Fed do, or the Bank of England with stagflation? Does it cut interest rates and risk even more inflation and hopes growth goes up? Or does it raise interest rates, hoping to rein in inflation, but then maybe strangle businesses and liquidity?
I think the Fed and probably other central banks are already on that line where they don't know which way to step.
Exactly. They don't know what to do. And then you have a populist government, which really doesn't help. I mean, I believe the Fed was pretty confident earlier this year that, by the end of 2025, rates will be at 2 point something, lower 3%. We will have fought inflation. And then you have the tariff problems. You have the volatile policy in the Trump administration. You've got the potential impact of the big and beautiful bill, which...
It's very difficult to look ahead then.
It's really difficult. Exactly right. I mean,
beyond like 1 week to the next. If we
absolutely right.
Yeah. I mean, all weather forecasts get hard to predict further ahead. You could predict the weather.
Yeah, but you couldn't put an umbrella on your back just in case. And this is sort of what I sort of do. I don't say, oh, it's going to be this and this, because I have done in the past, and some of my wonderful colleagues remind me of those I got wrong. But jokes aside, too much of a plug, but this is where insurance can come in a way. So when you I don't do predictions anymore. What I try to do is imagine a range of scenarios and try to position our books to be as well protected as possible, because insurance is a business of risk. We have to take risk. What's the point otherwise? So I expect, in a way, sometimes I use the analogy of a car, of a nice German car, beautiful car. You have it drives very fast, lovely, everything's fantastic. You know you will get hit because you drive over 10, 20 years, you will get hit. But you want to make sure if you get hit, you don't get injured, you get bruised. What do? You put airbags in there, you get a better warning systems in your electronic systems, you get better steering device. You make sure the car is, if you get in accidents, you don't come out like severely injured. And this is what I'm trying to do, imagining various scenarios that could happen, including political risk ones, and make sure that our book is fairly well protected as possible. But because you're absolutely right, there's so many problems happening at the same time at the moment, hitting everything.
How often are you having to revisit those scenarios?
A few weeks ago, I was supposed to get an update to my bosses, and I put the paper in the bin about 10 minutes before the meeting because a headline popped up which completely negated everything I said, and completely unexpected. I think I expected Trump to raise tariffs. I expect him, the 10% I had to stay, but I said there's no way he's going to do like 150% tax. What does he do? 135% tax in China. So like, okay, that goes to the bin. But the original premise still was there. I mean, the tariffs will be higher than before. But this, I think, taught me a valuable lesson of, in a highly volatile world, not to make too many predictions with confidence.
Kayley, just to round off, from your side, looking at PV examples of, events that have taken place, you didn't feel like you could predict them. It's like things happen so quickly. It's so easy to look back in hindsight and see things, but hard at the time.
Yeah, and I think, we've seen that with lots of territories, but for example, New Caledonia, we've seen sort of most recently. Now we go back through the history, we can kind of see, why it got to that point and sort of the triggers and, the sort of minute trigger that kind of causes it. But that's happening everywhere. It's obviously, you can't, like you say, you can't be a subject matter
But you
expert.
don't want to have a book that is just heavy on one or two territories. But nobody's expecting underwriters to be subject matter experts on every single Pacific island or Caribbean island.
Yeah, we obviously, we have external. We've obviously got Babak as our analyst. We've got external resources that we use as well. But like you say, there are territories that you think are nice, but then there's a small change that then makes it more difficult. So management might say, yes, you should know absolutely everything about every single region. And I suppose we pride ourselves on that. We, as a team, try to know the history. The history normally dictates the future. So we do try to understand what's going on. But like you say, there's so many countries, there's so many micro trends that are happening all the time that it's tricky. And kind of with the external influences from some of those other social media element, it does make it quite tricky.
People said that with the Arab Spring. It's like, well, why weren't you looking at the price of lemons on a Tuesday?
Yeah.
Or whatever it was,
Yeah.
Some things, maybe grain or, commodities in general, you might look at, but it's if every single market has a different index to track, then it's tricky.
There are some macro trends which can help you sort of prepare, because, even before the Arab Spring, for example, there wasn't enormous exposure in sort of my world of political credit risk to those countries because there have been weak credits anyway and very difficult political risk environments. Even in the Middle East, what's happening in the Middle East is not a new trend, new dynamic. This conflict has been going on for many, many years. So in my world, you would never cover highly exposed risks in that area. And we can see this now in China and Taiwan, of course, that people are getting really worried about risk coverage in that area, fearing a similar situation might happen. So I think people are watching some macro trends.
We finally hit China-Taiwan, which is probably the doomsday scenario of macro.
Yeah, if you think Russian sanctions were difficult for the world, if China gets sanctions, we are in for a very different situation.
Yeah, I think in that instance, everybody becomes a bit more of a realist in terms of what you can achieve.
Yeah.
Well, thanks both of you. Thanks, Kayley. Thanks, Babak.
Thanks, Dave.
Thanks for having us.
Well, that's nearly all for now, and I hope you enjoyed the conversation. Thanks for listening. Please subscribe and share this content, possibly give a rating or review, and of course, please join me next time for more conversations around specialty insurance and geopolitical risk. I've been your host, David Benyon, and I'd like to thank my two great guests, Babak Tavassolie and Kayley Stewart, both of SCOR Business Solutions. Production was by Peter McGill, and my cousin Lawrence Durkin made the music.